Hi, my Bitcoin followers! The digital token is trading at nearly $50,000, its highest point in months. And many people who stayed on the sidelines are probably wondering yet again, what is the best time to buy Bitcoin? So guys, today we give you a complete guide to what is the best time to buy Bitcoin. Without further ado, let's begin. With so much attention devoted to it, Bitcoin is the buzzword in the world of cryptocurrency. Bitcoin never fails to amaze or shock investors. It recorded an all-time high of $65,000 in mid-April, only to crash below $30,000 in May. It had recovered to surpass the $49,000 mark but is currently trading around $49,500. While those already invested in the world's most popular and oldest currency see this volatility as risky, potential investors see it as an opportunity to make quick gains. In such a situation, how does one decide when to invest in cryptocurrency? Industry experts have said that the current volatility in Bitcoin price is only short-lived, and another bull run may be around the corner. Whatever be the truth, there's no shortcut to making money. All speculative investments demand patience and the ability to read market trends correctly. One way to understand Bitcoin's ability to give return is by seeing its performance last year. Bitcoin value in March 2020 was around $4,000, and by January this year, it reached over $33,000, giving a return of over 800% in just 8 months. Before you put your money into the still highly volatile asset, however, there are some helpful things to consider according to financial and behavioral experts. Many investors know what a bubble is. It's what happens when an asset's price far exceeds its real value. And many smart people have expressed concern that Bitcoin is a bubble. Still, many have invested in the currency with little caution despite their suspicions that the price is unmoored from its value. It's common for people to buy assets even when they know they're overvalued because they expect prices to go even higher, said Bruce Mizrak, an economics professor at Rutgers University, Rutgers School of Arts and Science. And he said, they all believe that they can exit before the bubble crashes. Just remember, that's what everyone else is thinking. By the time most individual investors get into a rising investment, it's often too late, said Kent Baker, a financial professor at American University. Investors often fall prey to the social bias of herding, Baker said. They do what the crowd does, believing that everyone else knows more than they do, and that there's safety in numbers. We can't all lose all our money, they may think. Generally, such investors are wrong on both counts, Baker said. In reality, the other people in the crowd are similarly swayed by the same illusions. Trying to understand a digital asset's fundamental valuation is very tricky. With most stocks, you can at least get a price-earnings ratio, which tells you what investors are willing to pay for a company for every dollar of its earnings. That figure can help you determine if a company is over or undervalued. With cryptocurrencies being so new, there's also confusion about how to buy and sell them, how to keep them secure from losses and hackers, and how the taxes work. There's no free lunch in investing. Higher expected returns come with higher expected risks. The prices of cryptocurrencies are highly volatile, which means that they are highly risky. That said, most financial advisors say there's little harm and potentially a lot of gain with investing a small portion of your portfolio in the assets, typically no more than you could afford to lose. Experts tend to put the figure at between 3% and 5% of your investments. In theory, it makes sense to try and buy investments when their prices are lower and then sell once they reach their peak. However, this is far more difficult than it sounds. Timing the market is incredibly challenging, and it's even more difficult with cryptocurrency because these investments are far more volatile than the average stock. Crypto prices have been on a wild roller coaster ride, so trying to find the perfect moment to buy is nearly impossible. If you buy now because it seems like prices have bottomed out, there's a chance they could fall even farther, and you'll have invested too soon. But if you wait too long, prices could skyrocket and you've missed your opportunity. If you're enjoying the video, then make sure to hit the like button and subscribe to the channel for more interesting videos about Bitcoin. Cryptocurrency also doesn't have a proven track record like stocks, so it's anyone's guess whether these currencies will bounce back from their slumps. So far, major cryptocurrencies like Bitcoin have managed to recover from downturns. But there are never any guarantees that these investments will continue to thrive, and there's a chance that cryptocurrency in general will fail. If you buy when prices are low under the assumption that they will surge again, you may be setting yourself up for disappointment if cryptocurrency doesn't succeed. The truth about buying Bitcoin is that it doesn't necessarily matter as long as you're strategic about it. The key to making money in the stock market is to buy strong investments and hold them for the long term. If they really are good investments, they should grow over time and their prices should increase along with them. The same principle is true with cryptocurrency. If you believe cryptocurrency has a bright future and will change the world, it doesn't necessarily matter whether you buy Bitcoins at $60,000 or $30,000 per token. If it ends up reaching, say, $500,000 per token someday, you'll make a hefty profit regardless. Of course, there are no promises that Bitcoin or any cryptocurrency will succeed. But if you're going to invest, it should be because you believe in its potential and are willing to hold on to your investment for years or even decades. If you're only investing to try and make a quick buck, that's a dangerous game, and you'll likely end up losing more than you earn. Another way to reduce price volatility is to take advantage of dollar cost averaging. With dollar cost averaging, you invest a certain amount of money on a schedule, say $1,000 every quarter or $300 each month. Sometimes you'll end up buying when prices are high, but other times you'll invest when prices are lower. Over time, those highs and lows should average out. This can help reduce the impact of volatility on your investments, and you don't need to worry about buying at just the right moment. Regardless of when you choose to invest, make sure you're keeping a long-term outlook. Nobody knows whether cryptocurrency will succeed or not, but if it does, you can maximize your earnings by holding your investment for the long term. Investing in an entity when its price is low and expecting to surge in the future is considered a smart investing strategy. Comparing Bitcoin's value in April, it would not be wrong to say it's a dip in its price. Again, it's difficult to say with certainty when Bitcoin will surge or whether it will crash further. If you are thinking of investing in Bitcoin, there really is no perfect time. However, if your strategy is long-term gains, buying during a dip and holding it till you make a profit is an option you can explore. So guys, let me know down in the comment section below. Do you have any questions about it? For more interesting content, give this video a thumbs up and don't forget to subscribe to the channel for more awesome and interesting videos related to Bitcoin. Have a nice day, and I will see you in the next video.